Welcome to my $100,000 stock experiment, year 2, week 48, ending March 13, 2020. This isn't an endorsement to purchase any stocks that I bought, nor an endorsement to purchase stocks in general. I'm on a mission to become a great growth stock investor. Watch me on my journey, learn from my mistakes, and celebrate my successes. The coronavirus has essentially brought my experiment to a standstill. I'm not investing. I'm on the sidelines, 100% in cash, but I'm still watching the S&P 500 to see what's going on in the market. The S&P 500 closed 8.8% down for the week. This is a chart I shared with you last week. Up in the left-hand side, you can see in red, I show that it's from last week. The date is March 6, 2020. I want you to focus on the length of the bars. This isn't the daily percentage change for the overall index. This is the day range from the high to the low for each day. Typically, this index has less than a 1% swing from high to low each day. But at number 1, we were seeing some volatility where it was over 1%. At number 2, we were also seeing volatility over 1% and up to 2%. And at number 3, we were seeing big volatility all the way up to 5.4%. Notice at number 5, the lowest price on this chart is $2,825. Now we're looking at the current week chart from March 13th. And you can see number 5 is now down at $2,500 because this index dropped all the way down there this week. Trading on the stock market was halted twice this week, on Monday, the 9th, and on Thursday, the 12th. That happens when the S&P 500 is down more than 7% from the previous close. But like I said, this chart here is showing you the high to the low daily swing. Over at number 3, with the dates and the percentage swing for each day, I've changed the color coding on this. So the yellow is where it's between 1 and 2%. The pink is where it's between 2% and 4%. And then the red is when it's over 4%. So all week long, we had a swing of over 4% every single day from the high to the low range. Although we did have 2 green days in there, which is when the index closes up from the previous close. This is a 5-year weekly chart for the S&P 500. Up at number A, you can see that it says the simple moving average, and then it has 200. That would be 200 weeks. The frequency down at B tells you corresponds to what frequency is used in the simple moving averages here. So 3 times in the last 5 years, at number 1, 2, and 3, this index has fallen to about or below the 200-week line. It did bounce back at number 3. It fell way below it and then closed above it for the week, but we will see what the next few weeks have to bring. I'm not showing the Russell 2000 index this week as I think the S&P index gives me all the information that I need right now. The VIX or Volatility Index went all the way over 76 this week and closed at 57.83. This is way too volatile for me. I like it to be between 12 and 16. I went back in time to look at the volatility, and I had to go all the way to a 30-year chart to see this super high volatility. There was only one period in the past 30 years when it was higher than it is today, which was October 2008. Around that time period, we had several months actually that had it over 50. After 1 year and 48 weeks, the Melissa Method portfolio is up to $144,445 versus the S&P 500 for the same time frame up to $102,060. The S&P 500 is almost back to no profit at all. Here's the benchmark for the length of my entire experiment from April 13, 2018 to March 13, 2020. At number 1 and 2, you can see that I lost a substantial amount of my portfolio during these 2 time periods. And I'm hoping that now you can see I'm going steady. So I think I've learned my lesson of when it's smart to be out of the market. In the yellow, you can see that the weekly change for the S&P 500 is down 8.8% versus the weekly change of the Melissa method down 0. That's because I'm all cash. Year to date, in the purple, the S&P 500 is down 16.1% versus 2.5% down for the Melissa method. S&P lifetime since April 13, 2018 is up about 2.1% versus the Melissa method 44.3%. And my year 2 S&P 500 is down 6.8% and the Melissa method is 18.4% up. My weekly plan is to look for signs of market recovery, but it's quite possible that I'm just going to end my 2-year experiment in cash. Thanks for watching. Keep an eye out for my next episode, or better yet, subscribe to my channel, The Melissa Method. Don't forget to hit the bell if you want an alert when I post a new episode.